Wednesday, March 27th. Stan Ehrlich. This is market analysis. And I start out with the indexes and the spider. At the moment, we're up a very modest 1.5, but we've managed to challenge the high of yesterday. You guys know I'm looking for a downside correction. I'm looking for a move in the spider down to about 477, maybe even 465-ish. And happening starting very soon, but I can't yet get a really good handle on the start, except yesterday we had a bearish engulfing ER sell signal in the E-mini and the DIA. We'll take a look at those in a moment. The only reason why we didn't get a signal in the SPY is because the SPY did not quite get overbought on March 21st, which would have been last Thursday. As a result, no color change. It did have a bearish engulfing yesterday, an outside down day, and that is a potential beginning. But again, I'm missing an important part, the overbought for the spider, not the E-mini. Let's see what the spider's been doing this morning. It popped up on the opening and again made it a little bit higher than yesterday's high, came down quite a bit, not lower on the day. Yesterday it closed dropping like crazy. Remember, yesterday in the last 30 minutes of trading between 12:30 California time and 1 o'clock, the traditional stock market closed at 1 o'clock California time. The market dropped a lot, and the indexes created those bearish engulfings. In a few cases, two cases, the E-mini and of course the micro E-mini, but not the SPY, and also the DIA. We got signals. So this could be it. I would have loved to have had signals in the QQQ and the DIA also, and the SPY also. They came very close, but not quite. So yes, maybe yesterday was the beginning of what I've been waiting for. I'm looking now for some confirmation, and that'll be closing below yesterday's low. Next chart. Here is the E-mini. Here is the yellow telling you it's overbought. It correlates with the RSI. Perfect. Within a few days after overbought. In fact, 1 day, 2 days, 3 days later was yesterday, and an outside down day within the allotted number of days after the last time it was overbought did happen. And bingo, we've got our signal. We've got our trades automatically and the ER signals, ER1 that always trades on the day of the signal. And we are short an ER1 position trade. Plus, today we rallied back to approximately the middle of the range of the signal day yesterday. And we did put on new shorts. Here is the 5-minute chart on the ES June futures contract. Right there is my red trigger line. And as the market opened yesterday afternoon for the E-mini, it rallied up to and hit my new short sale trigger line for the ER3 new positions, both scalps and overnight ER3. Remember, ER1 gets in the day of the signal with two trades, either a scalp trade and or a position entry. And that is down here late in the day when it had the outside down day. The scalp trade lost a little money, unfortunately. And right now, the ER1 trade from approximately 12:45 California time yesterday, it has a losing equity at the moment also from yesterday's entries. Scalp, small loss. Overnight, we'll see what happens, a loss at the moment. The stops are in place, and they've been working fine. We haven't hit any offsetting stop yet. Hopefully, it'll go down quite a bit, and then we'll be hitting those stops with a profit. Maybe, I hope. So what about the ER3? Today, it went up and hit that trigger line. So we're short. Two more. And one of them just now, you saw it, turned to green. That means this morning's new short sale for the overnight position and the ER3 scalp trade both get in at the same trigger line today after the signal day yesterday, and both are profitable at the moment, and both were profitable anytime it's below my horizontal cursor, which it is right now. So we've got two tiny little profits momentarily and a larger loss from yesterday's position. Okay, everything's doing fine. What about my opinion here? Well, sell signal. We're only looking at the day after. It went up a little more than I would have liked, but it doesn't go up to the trigger line exactly every time. Occasionally, we will see that happen, and it'll be unbelievably accurate. And it does happen. But this time, it went to it, through it, bounced around, went up, made a new high. But the important thing is we're not out. We still have the trades. Hopefully, everything's going to work out. And I am looking for, as soon as possible, I have every trade on and have made every that I can with the strategy. Let's see lower levels quickly. Next chart, QQQ. No bearish engulfing yesterday. No signal in any way, shape, or form. We haven't been overbought since way back on February 12th. So I'm not going to get a signal. All I want is for the damn thing to go down and get back to support, which is at 413 and maybe even 395. Next, QQQ, 5-minute, close to the lows, doing fine. It made a new low for 1, 2, 3, 4 days. Not enough, but it's on its way, quote unquote, I hope. Expect, forecast. I'm wrong sometimes. Next, NASDAQ, June futures. No bearish engulfing. All it did was create a double top so far and not even getting overbought. So I don't have a picture perfect combination like I do occasionally, but good enough. Some official signals, some bearish patterns developing. We'll see what happens. Now it's the same symbol on a 5-minute chart, and we have a new low for 1, 2, 3, 4 days. But again, I really wanted to close below 1805. Yeah, 18,005, because that's the low on this date, and it'll be a new low, and I hope a new low close also, closing below the previous lows. Since at least March 10th, and if I go back to the daily chart, March 10th is, okay, this is March 15th here. So if we do close below the low of March 15th, it'll be a new low close for quite a while. Since the 23rd of February, 3 weeks. Good news. I like that. 4 weeks. A month. So that's going to tend to confirm, maybe I'm using too strong a word here, but tend to confirm the top is in and the move is going to continue. The move started on that day, March 21st. It is going to get perpetuated because of a downside breakout, if it can do it, when and if we close below 18,002. Okay. Russell 2000, pretty much the same commentaries. It did have a bearish engulfing yesterday, but it didn't work. This morning, we're actually up pretty good and near the high of the day, above yesterday's high. So the Russell at the moment is not conforming to the other technical tools I'm looking at on the other indexes. Strange. This is all by itself, and frankly, looking a little on the friendly side. Well, I don't like that. I want it to get bearish, act bearish, and give me some bearish signals. And here is the 1 minute chart for the Russell 2000. Came pretty close to making a total new high for the move. Okay, bonds. Nice rally. The bigger feature here is when we came down from a rally high on March 7th into support, support held. It was around the previous lows in February. We have now made another new high today since support was tested. And the question mark is, was that it? Is that the bottom? Are we about to see a big bull move here? Which is definitely what I expect over the pretty much the duration of the year. Let's just say the last 6 months. So near term, the last few weeks, next few weeks, or maybe a month or two at the most, I think I can afford to have a little bit of new lows, test support again, maybe a little bit of a breakdown. This channel sort of could be applying, which allows you to make a minor new low and still be in a bullish pattern. Downward slanting channels, when they finally break out, usually break out to the upside, which could be any time now. You got your 2 or 3 or 4 lows. You got 3 dominant significant highs to make the bear trend line across the top. And the line across the bottom would be called a bearish because of the angle support line, because it's supporting, it's underneath prices. So a channel construed as a bear trend line, standard, across the tops, and a bearish, still slanted downward, but support line. Okay, let's see what happens here. I'm liking what I'm seeing. I am basically bullish long term. I'm trying to figure out whether we're going to have one more, probably only one more, downside move. 10-year notes, pretty much exactly the same commentary. We don't have a channel. Something similar, but not quite. It did have sort of a double top. You could measure the double top, which I will do real quick. Take the lowest low and go to the average of the 2 highs, right about there. That is going to be the depth of the formation, and the depth of the formation is measured from the lowest low straight down. So that's your breakout, and your minimum downside objective is right there, 108 and 109, let's call it, just a hair below 109. Now, it didn't get that low. It only got down to 109.28, or a little under 110. So if it's going to meet my objective, it's going to have a modest 1 point lower low, which will allow bonds to do approximately the same. Will it happen or not? Right now, you also have the chance of a double bottom. That low, February 23rd, is almost exactly the same low as just about a week ago. So, is this support level going to turn out to be the double bottom and up we go for months and months to come? Got to wait and see a little bit. 10-year note on a 5-minute chart. It made the slightly higher high just a few minutes ago. Looking better. Support basically held. I like what I see. I'm bullish intermediate to longer term. Short term, leaning a little in that direction, but unfortunately we never got an official signal. Crude oil popped up yesterday and dropped back down today. All of it within a resistance area. No bullish breakout. Still stuck in a resistance area. So, having been overbought also at the highest high so far in the resistance area, I've got to still say south. I think we're going to see new lows very soon, maybe this week. for the last week or two. I think we're going to see the bottom of that support area broken below 79.05. And I think we're going to sink way down here in crude oil. Oh, I'm going to say 74.5, 72, 71, 70, even below 70. It'll take weeks, maybe a month or two, if I'm right. Next chart, heating oil. Gap down. Now, gaps are almost always closed, so bouncing back up a little bit to the low of the last few days would not be a surprise. Then it should turn down again. Breaking below 2.55 is going to be pretty bearish. Doing that is going to probably cause me to expect 2.38 and maybe even lower. Yep, if it can break below 2.32, you've got a new low for many months, probably well over a half a year, and a longer-term bear trend probably continuing. Natural gas already has started to do that kind of thing. And let me reformat the scaling. So we had past tense quite a while ago. A heck of a bear market in progress. From a small head and shoulder top that worked incredibly good. Ladies and gentlemen, if you didn't see it, I'll draw your neckline in for you. There it is. Shoulder, head, shoulder, all by itself. It looks like part of a broader double top. The breakout for the double top is there, and that didn't work correctly because it broke out and then went way back up. The head and shoulder top by itself, starting on July of 22, ending with the last shoulder in September of 22, a 2-month pattern. That did work very, very nicely. And as I've said many, many times, patterns predict minimum objectives if they work in the first place. But these downside or upside price objectives that the pattern predicts historically are minimums. And I'll give you an objective pretty quickly here on this head and shoulder top. That's it. Grab it. The day it broke out to the downside, that's your minimum objective right there. And it got there October 19th of 22, done. That pattern worked past tense. But after fiddling around for a month or two or three, it continued the bear market. So that head and shoulder top really is the beginning of a very huge, big, much longer term bear move. Period. And we're still involved in it. Wow. I don't know how low this can go, but it looks like today is a downside breakout, a perpetuation of that long-term bear market I just showed you. We need to stay where we are. We could go lower. I like what I see. Whoops, close that. I wanted to just drag this up a little bit. There's your past tense, a little bit of support. Gone. Next chart. Gold. I talked about the divergences across the tops. I talked about the divergence across the top of the RSI. We're getting a divergence sell signal, maybe, not conviction yet, no conviction. I want to close below 2170 on June gold. That would be the downside breakout. There may be another formation developing, but unfortunately, I don't have any bearish engulfing ER sell signals. I'm trying to justify staying bearish, but it's not easy. The market doesn't seem to want to trend up or down, going sideways lately. Silver, way different story. Huge bearish engulfing, saw it, told you about it, detailed it on Thursday of last week. It's working great. We're short ER1 overnight, and it's on the screen for you. At the current tick, it's a small profit, not much. Our trailing stop has been coming down, which is great. We have a new low for the move at today's lows, which is great. We're not oversold yet, so there's plenty of available room if you look at RSI, and making a new low wipes out another series of bids and, of course, sell stops. So the next thing is to close below 24.21, the bearish signal that I got prematurely. I've told you many times that the ER signals, it's built to try and pick tops and bottoms to the exact day. So far, this is the exact day. But I sometimes get signals prematurely and after the fact, which is not necessarily bad. After the fact still means a signal could very well make a lot of money. It just didn't pick the highest high necessarily. So on the way down, doing well, no problems. Like what I see, bearish. Maybe I'm going to get my downside objective at 22.9 reached. I have to think it'll take a week or two, maybe a little longer. Next chart, platinum, still testing support, doing a fairly decent job of hanging in there. But we're down on the day, 11, near other previous openings and or closes. And the low is in support. This is trying to bottom out. I can see the possibility of some bullish pattern developing. I don't trust it. With silver doing what it's doing, my expectation, and it hasn't started yet in gold being bearish, I doubt sincerely that platinum's going to move up much for very long if I'm right about gold and silver. Next, high-grade copper, not precious metal, just simply a metal, in support, trying to bottom out, not doing a very good job of it, making a new low. RSI is nowhere near oversold, so I can't rely on that. It looks like it's going to slip a little more, but we'll watch carefully the bottom of the support area to see if that tries to hold. Soybeans, oil, meal, corn, wheat. As you know, I am bearish intermediate to long-term in the grains across the board, but I'm wary about it a little bit. I'm looking for bottoms, but they're not really developing very well so far. So I have to stick with the trend. The trend is your friend, and I'm looking for lower levels. We tested support once, broke it a bit, but it did come back. Now support is still there, weakened a little bit by the break that it had a month or two ago. And here we are, slipping again. I expect it'll drop off some more. We'll see what happens when it gets back to support. Right smack in the middle of RSI 50, so I have to wait. Bean oil, pretty much the same commentary. No particular sell signal across the highs. Lately, we did get overbought. It did make a new low today. So overbought worked. Resistance didn't quite get there, kind of close. I expect we're going to test support. Let's see if this can break out down below the support and perpetuate a longer term bearish situation. But no signals, unfortunately. Meal, same kind of story. Resistance stopped the rallies generally. No new low yet, but it looks like we have a bearish engulfing potential. Today's high appears to be just a tiny bit higher than yesterday's high. Today's high is 341.90. Yesterday's high was 341.70. 2 ticks higher. So yes, we have an outside down day at the moment, down, but not very much. So that could change to an outside up. You can't change the high, you can't change the low. It is an engulfing. But since the market is dynamic and not closed yet, and it's only down a little, it might go up and have an outside up instead of an outside down. It gets very confusing. I'm going to go to the next chart. Next, corn. Aha. Now it doesn't look like a dumb idea. that we got out about 2 weeks ago. We left a little on the top, we left a little on the bottom, but we did buy it on the day it bottomed out. And that is why I have built the ER Signals trading strategy for TradeStation and NinjaTrader. Great trade, not complaining. You're always going to leave a little spilt milk. You're never going to get the exact low tick and high tick. In the 52 years, I've had one client, I was a broker for 35, that actually did do that. He bought the low tick, and in the same day, he sold the high tick. Bob Prechter, the Elliott Wave Theorist, bond options. I don't remember what year, 20, 30 years ago, something like that. He was a client of mine for a year or two. Now, corn, looking for lower levels like I've been saying all along, and now I've got my conviction, my downside breakout. It's big. That's what I wanted. Substantial, perfect. Frankly, I'm looking for the support to be broken, except for one comment. We're getting oversold. So maybe support will hold. I don't see it happening yet. We are low and last right now. Next chart, wheat. Actually slightly higher, 2.2 higher. We are out of our previous longs. One of them made a little bit of money, hardly anything to speak of, probably a couple of pennies or even less. And the numbers are all there. But the second entry, which is the ER3 on a downside retracement, 2 days after the last signal day, remember wheat gave us two buy signals at the very low of the move. One was the very bottom, and the one before that was on the day it happened, the very bottom, but the next day you made a lower low. Both trades turned out to be good. We're flat, waiting for something new to develop. My opinion is kind of neutral at the moment. Remember, I don't trust the grains in general. Trend is your friend. I do want to point out that we got a sell signal on the exact top of the market back at the beginning of March, at the beginning of the war, after a series of unbelievable straight up limit up moves, some of them lock limit up all day long, meaning it opened limit up, the high, the low, the close was limit up, never had a price range, only one price. Many more people wanting to buy than sell. That's why it locked limit up on the opening tick. Not common, very rare. Last time I saw the grain markets do this kind of thing, which wheat just did, and only wheat, pretty much all of the grains did this back in 1972 and 3, I think, and it was called the Russian grain deal. Next, wheat, December, 1 minute chart, stopped out, same trade, 1 minute by minute detail. Next, cattle. We didn't get the bottom of the market. We did get a buy signal a little after the bottom. It's working unbelievably good, but the last couple of days we've had a sharp decline. Now, I said yesterday, I'm keeping a relatively slack trailing stop, not because I want to show you how much I can make. I'm showing you that you can make adjustments and maybe stay with this trade a lot longer. Now, this would be an investor type of longer term stop. You don't want to get too close too fast, or you're going to get stopped out. Now, that is not necessarily bad. Being stopped out only means you got out. Was it a profit? Yeah, okay, good. Was it a loss? Not so good. But getting stopped out doesn't mean it's a loss. So we have our stop with a very nice profit at around 175.40. It will move up if we start moving up enough or fast enough. So we're still long. Our stop is in place for the last couple of weeks, same level. The correction so far hasn't banged into the stop and stopped us out. I don't want to make any changes at the moment. And we're coming back up a little bit today. We'll watch it to see what happens. Here we go, hogs. I don't like this. I said yesterday, I don't like this. I thought late last week that we had a head and shoulder top forming. Everything looked really good. That does not guarantee that it's going to work. Looks aren't everything. Where have I heard that? It was 16 days from the exact first shoulder high, and at the time, you don't know it's a shoulder on January 30th. It came down, it made a high, and the high was 16 days later. That's not important yet. You don't know it's the head of a formation yet. It came down and made a low. Now, this low is a little higher than normal, but it's a low, and it started to rally right about the day of March 15th. I started yelling, wait a minute. The timing is perfect, 16 days from the highest high. This market got almost overbought on a sharp rally, which would be perfect for a shoulder high. And it's exactly what it started to do. Work its way down 1, 2, 3, 4, 5 days to hit the neckline. But it should have closed below the neckline Monday. It didn't. Tuesday, yesterday, it rallied. That is a little bit unusual, but doesn't kill the formation. Rallying above this rally high at 87 at any point now, time-wise, would kill the formation. Going sideways for too much time, a week or two, would kill the formation. If I went straight back down in the next day or two without making much of a new high, maybe up to 86, 72, maybe even up to 86 or 87. But that's stretching it. This is just about my tolerance on a complex last shoulder. I would have loved to have seen something over here to complement it, because head and shoulder tops and bottoms are pretty symmetrical usually. So I have a problem with this. I don't have any symmetry anymore. It's not breaking the neckline like it should have. And I have to be very, very careful. It might still be good if I can break out below the bottom, below the neckline immediately, very quickly. I have to tell you before the end of the week, probably next couple of days. Then we're off and running. But it has to go sideways to lower or sharply lower during the next 2.5 days. Next, we've got the other ICE charts, which I'm sorry to say, I'm going to use TradeStation to show you those instruments or symbols. And here we go. Unleaded gas coming down after being overbought and starting to challenge some support. That's around 2.6. Modestly bearish for a bit because of the overbought, which is working. No signal, too bad. TradeStation next, sugar. Rock in a hard spot, don't know what to do, gonna wait, no signals, RSI pretty neutral at 56, nothing significant lately. When last time it got oversold, it did bottom out, exactly what I would have expected. But here we are in no man's land. I'm waiting. Next, unbelievable. Cocoa won't quit. Yesterday's blow off top, and I'm going to have to keep saying blow off top until it happens. I'm sorry. It sounds like a broken record is, or a broken clock is right twice a day. I know what you're saying, Stan. You're going to be right sooner or later, and that doesn't mean you know anything about technical analysis, et cetera, et cetera, et cetera. I can't help it. This kind of overbought condition usually leads to a big, sharp downside move, and it's just not taking hold yet. The thing to do is not get excited about the bull move and get into it now. Don't go getting suckered into buying a market that looks like this. You're asking for a big hurt. All of a sudden, you will not see it coming. So I'm looking for a sell signal. I'm looking for a big break. I do not recommend being a buyer. And yes, it's possible that it could go up a chunk more before it crashes. But these kinds of parabolic moves usually top out very fast, very sharply, like what happened in wheat 2 years ago on that parabolic series of limit up moves before the war. I do not know, because I'm not a fundamentalist, what is causing this, but it sure as heck looks a lot like orange juice several months ago. Next, coffee. I don't know, sideways, dull, boring, pennant. Next, cotton, and pretty much the same situation. We're looking at a small head and shoulder top. Oh, I'm sorry, I gotta draw the parallel here. This is what I think hogs are about to do, except there's 2 or 3 days here above the neckline for hogs. Cotton didn't do that. Cotton behaved almost textbook out of a book, or textbook out. So we broke the neckline, rallied back to it, but a little bit above it. That's the only unusual thing. The close is below the neckline, so okay. Down, down, sideways, down. A little bit up yesterday, day before yesterday, and today already, boom, new lows. Probable new low close. Great. I even mentioned yesterday, I thought maybe that was enough, and it could make new lows soon. I didn't think it was going to be today, but no problem. And lastly, this is the OJ at the moment, sideways, boring. The head and shoulder top I was referring to was this shoulder. That's the head. That's the shoulder. The neckline is like this. It worked great. Have a great trading day. Stan Ehrlich, mañana.